What's going on YouTube? Walking Answer here, and in today's video we're going to be going over what a stock split is and how exactly it works. So let's get right into it. So, what is a stock split? So a stock split is simply when a company decides to increase the number of shares that are outstanding, and what outstanding means is the amount of shares that are available to trade. So a stock split is when a company wants to increase the number of shares that are available to trade. And the way that they do this is they issue more shares to its current shareholders. So if you own X amount of shares of company Y and they wanted to do a stock split, the way that they would do this is by giving you more shares than you currently own. Now you may be asking, how is this possible? How do they magically give you more shares? Well, again, the way that they do this is to increase the number of shares that are outstanding. And after the split, the stock price will be reduced because the numbers of shares outstanding has increased. So because they added those shares, the price of the stock before the split will be smaller than it is after the split, because adding the shares increases, I mean, adding the number of shares outstanding, that increases the number of shares that the shareholders already own. Don't worry, it sounds confusing now, but it'll become a lot more clear. So you may be wondering now, how the hell does this thing work? So, so off the bat, just keep this as a rule of thumb. Virtually nothing changes about the stock except for its price change. So stock dilution does not occur. If you don't know what stock dilution is, leave a comment in the video and I'll explain it there, or I'll make a video in the future. But, during a stock split, nothing is changing except for the price of the stock. So there are several types of stock splits that can occur. You could have a 5-to-1 split, you could have a 4-to-1 split, you could have a 3-to-1 split. So now you may be wondering, why does a stock split to begin with? And the answer is simple. The reason that companies make stock splits is to make the price look cheaper to investors and more attractive. So if a company is trading at like $3,000 and they change the price of the stock to like $200, that'll make the average investor more likely to buy into it. It's less intimidating to become an investor with that company if the price is lower. It feels more affordable to an investor. So yeah, so people are more likely to buy a $100 stock over a $500 stock because everything is a numbers game. The cheaper it looks, people think, okay, I'm getting a better deal. So yeah, so usually when a stock split is announced, a stock goes on a bullish run up until its split date. The split date is the day where the stock splits and its price is cut in half by whatever factor that it's going to be split by. So, here are three examples of stock splits. This little pink marker, that's the day of the split. So first we have Tesla. They did a 5-to-1 split. Next we have Apple right here too. They did a 4-to-1 split. And lastly we have nvidia, who also did a 4-to-1 split. But let's get into this really quick. So Tesla, they had a 5-to-1 split. The price, so the price before the split was 2,213. Now it's 5-to-1, so the price post split is going to be this number divided by 5. So after this date, there's a drop. So like I mentioned before, there's a bullish run up once they announce the split, and then like right on the split date, there's like usually, now I'm not saying this 100%, but there's usually a slight correction in the price. Excuse me. So what happened was, on the day of the split, they're at $2,200, but now it's 5-to-1. So if you had one share of Tesla pre-split, it was worth $2,200. The day after, you now have 5 shares of Tesla, and all 5 of your shares are worth $442. So yeah, that's how that works. The price is the only thing that changes, you know. So let's look at Apple next. So Apple, they did a 4-to-1 split. You know, they announced it. Their low was 87. They're running up again, right as the split date approaches. It's running up and then it pulls back. It has a correction. So we see this pattern right here with Tesla and with Apple. I feel like we'll see it again here with nvidia because its split date has not arrived yet, but history tends to repeat itself in the stock market. So with the Apple 4-to-1 split, you know, pre-split, each share was trading at $500, but the next date, you know, it's a 4-in-1 split, so 500 divided by $4, each share is now worth $125. So if you had one share of Apple pre-split, that share was worth $500, but post-split, you still have one share. Well, no, you have 4 shares now, but those 4 shares added up to the price of the one share it was, you know, a day prior. So 500 turns into, so one share for 500 turns into 4 shares for 125. 4 times 125 is 500. It's the same. The price does not change. So now nvidia's is our final example. They recently announced that they were doing a stock split, and their price is currently at $760. So like they announced it around here, and look at this crazy run up that they've been having. I'm predicting that there's going to be a pullback on this split date, or like around the time of this split date, just as it occurred with Tesla and Apple, and I will be buying puts. So that's a opportunity out there. If you know what that means, take advantage of that. So yeah, the price post split for nvidia is to be determined because it's still like running up. It's still climbing. So yeah, that's all for today, everyone. If you learned anything new, be sure to leave a like and subscribe. Check the description. You know, there's some valuable educational courses down there. You can learn the ins and outs of stocks and options from this stock market beginner bundle. It's very much worth it. It's worth your time. But yeah, that's all for today. Walking Asset here, and I'm out. Peace.
Gonna just keep running away?